If you're in gold, you're going to make a lot more Bitcoin. And that's what this chart is telling you. It's how expensive is Bitcoin if you're in gold right now. And right now, gold is gaining on Bitcoin. Now, on a weekly time frame, this is a really nice looking close. Really strong green candle through all this level here. It's probably going to come back a little bit and moderate back a little bit, but I'm watching this and I think this is really, really strong. Now, they can both run together. It's what is the fastest horse and what is outperforming. Now, Bitcoin, I don't think becomes that fastest horse again until we begin to see some higher levels get flipped. So it might be the 200-day moving average. We might see a bit of momentum start to click up. But the 200 week is obviously, we're grappling with it right now. So it's in a weakened state. We even closed beneath it today, while gold is looking much, much stronger. So it could be a nice shorter term dynamic option for your portfolio instead of, running into Hyperliquid or Zcash, which I still think doesn't look too bad, but still there's a lot more risk around than being in gold. So I'm watching this here. I think gold can quite easily come up here another 10%, which would be a really nice short term move if you're in gold to make more Bitcoin. All right, let's get on over to Bitcoin. Actually, a really interesting setup here because we're all watching the 200-week moving average and it closed through it today again. And I think it might be the wrong thing to be watching right now because I think we're in a pretty tight range. And you can see here, bounce, 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 bounce. We just drop beneath it through here. This is the bullish divergence we're seeing. So lower, essentially the opposite of the USDT dominance chart. So lower low, while momentum is gaining, higher low, higher low, higher low. There's not much stopping Bitcoin here from having that bounce that we want. It's just bulls have to step on the gas. There can be a divergence, the biggest divergence I've ever seen. But if the buyers don't show up, then it is what it is. It just doesn't play out. The level that is so important is that 6,500, 500. But I think that 67 around the short-term holder cost basis is equally important. So through that, something like that. But here you got the 200 and the 10. If we get a squeeze through that level, that looks really nice. The biggest takeaway from today's session is softly, softly. Don't do too much. Don't try and force anything. There's no need to trade. Right now is just a horrible trading environment. There's no volatility whatsoever. So any movements, any breakouts have no sustainability to it. If you're opening positions, you've got a nice tight stop loss, you're likely going to get tagged. Even if you're suddenly in the money, you check your returns and you're like, oh, great, I'm an unrealized profit. And then the next day you check it, you probably have your stop loss wiped out. So this is why we need to wait for really core levels, I think, and not trying to push things. If you've got 5 good setups, I would almost say narrow it down to 1 and stick with that one choice. Don't trade 3 of the 5 because the market's just not in the place for that to come off. Unless you're really proficient at shorting. But even then, the volatility to the downside is quite limited and compressed. Unless Bitcoin does break down here. If Bitcoin breaks down to this kind of level, then yeah, your shorts are going to pay off big time in altcoins. But right now, it's grappling with the 200. It's closing above, closing below, closing above, closing below. It's just tearing people up. So stop. You're not professional traders, and even professional traders would stay away from this.